Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Certainly Tuesday, the big focus is coming on to this meeting between Poroshenko and Vladimir Putin. Now these tensions in eastern Ukraine have certainly been driving financial markets in recent weeks higher and lower, and certainly the fallout from this meeting, whether it be good or bad, will once again be a big impact on the markets, and certainly investors into Tuesday are certainly a little bit cautious on the back of that. Also, markets are still moving on the legacy of this Jackson Hole symposium that we had last week. Certainly two key factors coming out of this. The Fed and the hawks on the Fed are beginning to gain control, I think, beginning to sort of mould potential moves in monetary policy. And certainly Janet Yellen didn't really do a great deal to douse those flames on Friday with her speech. It was fairly mixed, fairly much sitting on the fence, and certainly didn't give maybe the doves what they were looking for. And certainly the strength of the dollar that we've seen in the last few weeks has continued over the course of that. And certainly also what we've seen in the euro as well, the weakness of the euro has been also driven once again by Mario Draghi. His speech, which highlighted again the divergence of monetary policy between the ECB and banks such as the Fed and the Bank of England, continued to suggest that the ECB Governing Council was going to remain accommodative on monetary policy and maintaining all the tools in its arsenal, and going to use those tools moving forward. So certainly it looks like the euro weakness that we've seen in the last few weeks is going to continue. Okay, so how is this really playing through into the FX markets? Well, certainly, as I said once more, dollar strength and euro weakness. Also, we're seeing sterling weakness and yen weakness as well. So that's all tying up into the euro dollar continuing to move lower. That's pushing towards that $1.31 key September 2013 low. Now, any sort of strength in this euro chart it continues to be sold into, and I think in the near term there's bit of resistance certainly around $1.33 that we could be looking out for. So any sort of pop higher, I think, is still a chance to sell in the euro. Similarly in cable as well with sterling dollar. Sterling continues to drive lower. 6 weeks in a downtrend now. A big sell-off since that $1.71.92 high that we saw all those weeks ago. So it continues to pull lower. It's currently trading with a resistance band, a key resistance band of $1.67 figure. And I think any sort of rebound into maybe $1.66 figure to $1.6650, I think any sort of rebound into that sort of area is probably once again going to be seen as a chance to sell, because I see further downside testing in this cable chart in due course. And again, in dollar yen, I think what we've seen in the last week or so is a change in this outlook. There's been a real shift in the momentum indicators, and it certainly suggests that with a breakout above 103 and subsequently 104 big figure, I think that suggests that the bulls are regaining control of this chart. And I think any sort of weakness, a little bit of near-term technical overstretched conditions in this dollar yen chart, but I think any sort of control back towards the 103 big figure area, any support around there, I think should be seen as a chance to buy. Okay, so what are we looking at in terms of the indices? Well, again, Wall Street remains strong. It's so positive in terms of how it's reacted to, first of all, the earnings season, the strong earnings season that we've seen in the States, but also being relatively sheltered from the Russian geopolitical tensions as well. So strong move on the S&P. 2,000 was obviously a big round number that we were looking out for. That got hit last night. And it certainly doesn't look like it's going to be stopping anytime soon. For the DAX, they've had a strong rebound actually in the last week or so, certainly helped by the calming tensions between Russia and Ukraine, and it's now pushed above an intraday target of 9,490, and it's also being above that 9,400 pivot level. It's now up towards the next pivot level at 9,600, so that is a next target area that you can be looking out for, but certainly improving on the DAX. In terms of the FTSE, it's a slightly better scenario for less volatility and more of a calmed and assured move higher, but it needs to now break above that 6,834 key reaction high that it saw at the beginning of August. If it can break above that high, that is a big level, because that is another key lower high that we've seen throughout the summer. and it would be a real signal of intent if it can start to break above that level. So watch out for that. Now, in terms of gold, once again, gold has been driven lower by the taking out of the war premium as tensions have begun to calm down between Russia and Ukraine. And certainly, obviously, today there'll be a big focus on gold and watch the gold price spike around on Tuesday as this meeting between Poroshenko and Putin goes on. The breakdown, I believe, below 1280 is a key move. I think that suggests that that is a key support that's breaking down now, and it should ultimately now mean that we drift back towards 1240. But the big caveat, obviously, is with geopolitical tensions. If they flare up again, I think the gold price obviously would be moving higher. Okay, so what are we looking out for the rest of this week? Well, we've got on Tuesday, we've got the US durable goods and also consumer confidence Tuesday afternoon. Consumer confidence has been a big number, multi-year highs there. So even though it's going to be coming back, forecast back towards 89.0, I think it would still remain okay in terms of that. Then on Wednesday, we're looking at German unemployment and, interestingly, German inflation as well. That German inflation data could give us a lead indicator as to how the Eurozone inflation data comes out on Friday. And certainly the Eurozone inflation data is meant to be coming out around about 0.3, so further decline in that Eurozone inflation number as it piles the pressure onto Mario Draghi and the ECB to engage in further monetary easing. So that is the big figure that we're looking out for this week. So until then, I wish you good luck in your trading, and I will speak to you next week. Thank you.